And to discuss the latest news moving the Nigerian stock market, I'm now joined by Kayode Tinoye, a strategy and business officer at Diamond Bank. Kayode, thank you very much for joining us. And what do you make of the market trend these days? I think the consensus is that this is the season where we see the market trade sideways or fall a little bit, and we've seen that happen in August and September. Do you anticipate a recovery anytime soon?
We saw the market trade lost about 4 basis points yesterday. We saw some volumes in GT Bank pushing market volumes to about 3 billion for the day. But I think that aside the seasonal effect of the break, August and September, we are also seeing some silence on the part of international investors in the Nigerian market. And that's really affecting the volumes that we are seeing currently, and this may continue. But interestingly, we saw some demand for some banking stocks yesterday. That may continue today, and we could see some temporary stability in the market today.
All right, I'm struggling to hear you, Kayode. Hopefully our directors can fix that. But let's move on to your thoughts about the big news yesterday about Dangote looking to invest in an oil refinery, a fertilizer plant, and a petrochemical plant. A lot of people say that's a risky place to go, given the fact that the fuel prices and indeed petroleum product prices are regulated in Nigeria. Of course, government subsidies have been a big issue for the most of Nigeria's history. So give us your thoughts on how successful you think this venture could be.
Well, I think it's a pretty important development for Nigeria. We've struggled so much in the past with our importation bill as far as refined oil is concerned. Dangote is coming to the stream to stop that, and according to the company, is going to complete that transaction in 2016. I think that would bring to fore the fact that that market needs a lot more deregulation, a lot more, the government needs to make it a lot more profitable for other people to invest in. And so we might begin to see government taking a second look at the regulated environment.
Let's take a bit a view as well on agriculture. Of course, the Nigerian Economic Summit is focused on agriculture this year, and a lot of people continue to point to the fact that even though agriculture accounts for about 40% of GDP, its representation on the market is still very low. Only a few companies like Presco, like we did see the CEO speak to us just now, and give us your thoughts about how you see that dynamic changing going forward.
Well, I think, first of all, I would say that the sector is not as big as we say it is in the Nigerian economy in terms of its contribution to GDP. Don't forget that the GDP is about to be rebased, and we might see some drop in the contribution of agriculture. But that is not to say that it's not an important sector for the Nigerian economy. It's about
all right, let's move on back to the markets. What's your outlook for this market going forward, particularly into next year? I guess even though it's September, you get the sense that a lot of people begin to think about 2014 at this stage of the year. Given the fact that the market is sliding now, it's probably the best time to buy if you think the market is likely to recover going into next year. And I think the big catalyst a lot of people point to these days is, of course, Q3 earnings, and then, of course, there is the X-Gen, the take-off of X-Gen, and what that means in terms of the dynamism it brings for the market. What's your outlook for stocks going forward?
Well, I think the market is likely going to be quiet for the rest of this year. A lot will depend on how banks' earnings and some of the other key players in the market. Recall that the banks are still trying to evolve strategies to show up their earnings in light of the recent regulations by the CBN. So by the time Q3 results start coming out, which many analysts and investors do not expect to be significantly higher than what they did last year, we might begin to see some little positioning here and there, but I do not think there will be substantial activities for the rest of this year. And going into next year, it's a prior year to the election, and I think the market will still remain quiet for some part of the year, especially.
What is the biggest risk you see going into next year? A lot of people talk about the exchange rate. We've seen some pressure recently. Do you think that that is the big key risk? Because foreign investors have become such a big part of our market. If you're looking at fixed income, you're looking at equities, and of course, any uncertainty there is something that would scare away a few investors in that respect. But going into next year, what's the big risk that you think investors should keep a very close eye on?
I think it's basically the political environment and the security situation in the country. I'm talking strictly from the point of view of the domestic investment environment for Nigeria. I think that's a key risk. I do not think the exchange rate is a big risk. I think the CBN will always really protect the Naira as they have been doing over the last couple of years. But I think the investment environment might be constrained by the fact that a lot of people will see uncertainty in the political environment as we approach 2015, and we see a lot of caution in that aspect.
Okay, Kayode, let's leave it there. Thank you so much for joining us on the show today. Kayode Tinuye, Strategy and Business Officer at Diamond Bank, talking us through the Nigerian stock market and the opportunities that he sees, and of course the broader outlook for equities. That's where we'll leave it from the Open Exchange West Africa team for today.